Hello everyone. I'll be sharing my thoughts on the highlights of the monetary policy announced by the Reserve Bank of India on 6 June 2025. I'll cover a few points like why did the RBI cut rate now, how it will impact consumer, what is the pros and cons, what is impact on financial market, how do you view from global economic point of view. To start with that, why did the RBI cut rate now? Well, India retail inflation has cooled just to 3.16%, comfortably below the RBI's upper target of 6%. This created the space to focus on reviving growth, especially in a year where the global economy is slowing and India is balancing growth with stability. The central bank has also shifted its stance from accommodative to neutral, showing flexibility, responding to future inflation or growth challenges. This pivotal decision by Reserve Bank of India that could shape up India's economic path for 2025. The key highlights of the policy are repo rate reduced by 50 basis points to 5.5%, cash reserve ratio cut by 100 basis points to 3%, policy stance shifted from accommodative to neutral. The 50 basis point reduction in repo rate is steepest in 5 years, aiming to stimulate economic growth amid global uncertainties. How it will impact on consumers. Home loan EMI decreased approximately by 3,000 rupees per month on a loan of rupees 1 crore over 20 years tenure. Lower interest rate make borrowing more affordable. What is impact on financial markets? The financial market cheers the move. The Sensex jumped over 700 points, which we saw on Friday. The moment announcement has come from RBI. Nifty is also rallied, led by banking stocks, real estate and auto stocks. This classic market behavior, lower interest rate, market borrowing cheaper, which boosts consumer spending and corporate investment. For stock market traders, this translates a bullish movement in rate sensitive markets. What is the pros and cons? The pros are stimulative in economic growth, reduce in borrowing cost, boost in consumer spending. What is the consequences? Especially from the bank's point of view, banks may face net interest margin pressure. Depositors could see reduced returns, and the RBI now has limited scope of further rate cuts if needed. The rate cut comes at a time when India is navigating complex economic environment. GDP growth remains moderately strong at 6.8 to 7%. Urban demand is improving, but rural consumption is still weak. Private investments are picking up, but slowly. This move is aimed at create liquidity and confidence, especially in sectors like MSME, housing and infrastructure. How do you view from global economic context? The RBI decision is mirror a broader trend. The US Fed and European Central Bank are signaling a pause or potential rate cut. However, unlike West, India still has room to cut rates due to its stable inflation, strong forex reserves, and fiscal discipline. Having said that, a major risk remains geopolitical tensions and commodity price shocks, which may quickly reverse inflationary trends. Thank you everyone. Wishing you good luck.